Hey there, it's Ryan Skaggs. This is the Mortgage Minute. Thank you so much for tuning in. While I've got you, get down there, hit that like button, hit that subscribe, hit that bell icon, and you'll be notified every single time I'm posting a new video. Do weekly updates on the mortgage market and real estate market. So let's get into it. Where have mortgage rates gone this week? They've come down again 2 weeks in a row. So we've seen a nice little reprieve here over the last 7 weeks that we had rising rates. And really since mid-January, probably of 2021, we've seen rates just continue to tick up. Now, one thing I've been telling my clients and a lot of people out there is that this is likely only going to be short term. We're still seeing a lot of data that shows inflation. We're still seeing a lot of things that are going to tell us that rates will modestly go up throughout the rest of the year. But in the current market, with some J&J vaccine news of getting pulled off the market and things like that, some other data that we've seen mortgage rates kind of come back down slightly. So our average 30-year fixed, according to Freddie Mac, is at 3.04. That's down from last week. Again, second straight week that we've seen that down. Now, the topic this week that I want to get into is what are buyers doing to get their offer accepted? And I've talked in the past, and I'll link the video above. I've talked about what I am doing to help in terms of, providing a letter about my experience and from the lending side, getting clients pre-underwritten so they're actually ready and through underwriting prior to them going through into the next step. So there's things that the lender can do. But there's also things that the buyer can do that are very creative with potentially the offer. And I want to run through what some of these things mean. One of which is an escalation clause. So if I'm going to purchase a home for $100,000, I may put an escalation clause in that says, I am going to pay $1,000 more than any other offer up to $105,000. So listing agent, if you have an offer for 104, I will automatically go to 105 based on this escalation clause. You need to provide me in writing that offer. You can black out the names, but at least I know. And then you can get up to X amount over that kind of Y offer. So that's typically an escalation clause. With that said, that's like par for the course. Doing an escalation or writing a letter to the seller and saying, oh my gosh, we really want your home. It's beautiful. We're going to have barbecues in the backyard. They're getting 10 offers. They're probably getting a few of those already. So those are going on as well. So you're seeing letters to the seller. And again, I'm writing a letter to the darn seller and the list agent from the lender standpoint saying, hey, do you want to put your transaction or take that pre-approval letter from someone you don't know or someone that's got a reputation and has built a business based on closing on time and being able to do the job right. So, it is a little bit crazy. And I've also seen recently, and here's the last two that I want to bring up, is clients waiving the appraisal contingency, meaning that if a house does not appraise, and I did talk about this last week, what happens, they're waiving the contingency, meaning that if the house does not appraise for whatever the purchase price is, they have the ability to, or the seller knows that the buyer will be moving forward no matter what. So typically the buyer has a contingency in place saying, hey, let's pump the brakes. I can walk out of the contract, whatever else, if it doesn't appraise. Now some of these are saying, hey, that's okay. I'll put extra money up if it doesn't appraise. I want the house and I want it for this price, so let's move forward. So that's the appraisal contingency. Then you also have clients that are going as far as to offer to pay some of the seller's closing costs. So I've actually got one of those that we're putting an offer in, and they're paying a portion of the seller closing costs. They're saying, hey, we're going to pay up to $2,500 of the seller closing costs as part of our offer. And the reason they do that is they don't want to increase the price so high that it might not appraise. Again, to that same conversation we just had and where I did that video before. But they want to find some sort of incentive for that seller to be able to look at their offer and say, hey, this is at the top of the pile. This is unique. This is going to save us a little bit of money. A lot of times closing quick and being right towards the top in a really solid pre-approval letter, that's going to give you the best opportunity. But again, people are trying to think outside the box. So this is the Mortgage Minute. This is your update from Ryan Skaggs. Thank you so much for tuning in. Again, hit that like button, hit that subscribes. I would be forever grateful, and we'll see each other again very, very soon.